Hello students, you are welcome to lecture series on ACT 303 Corporate Accounting. Study Session 5. We will be treating balance sheet of limited liability company. Introduction. Those interested in business enterprise, that is owners, managers, suppliers, grantors of credit, are generally confronted with financial statements prepared by accountants. These include a balance sheet showing the firm's condition on the last day of the accounting period, among others. So this study session will introduce you to the balance sheet, component of balance sheet, and specimen form of balance sheet. Learning outcomes for this study session. When you have studied this session, you should be able to define and explain the balance sheet, understand the components of balance sheet, understand the specimen form of balance sheet. Balance sheet. According to Lang and Kazim in 2006, they define balance sheet as the statement that shows the presentation of the summary of assets and liabilities in a well-arranged form, so that the financial position may be clearly ascertained. Components of balance sheet. Under asset, we have fixed asset. These are tangible assets which have a relatively long life, more than 1 year, and are relatively fixed. Examples of fixed assets are land, buildings, motor vehicles, office equipment, furniture and fittings, premises. Current assets. These are assets that are acquired and held for resale, and not as agents of production, but for the purpose of eventual conversion into cash. Examples are debtors, stock in trade, bills receivable, cash in hand, cash at bank, prepaid expenses, marketable securities. Fictitious assets. These are merely debit balances not written off items of expenditure of unusual character which are not recoupable. Examples are preliminary expenses, formation expenses, and losses which have been carried forward from one period to the next. Intangible assets. These are assets that cannot be seen and touched, although they may have value, according to Gabot 1982. Examples of intangible assets are goodwill, patents, copyright, trademark. Liquid assets. These are cash or items such as debtors, marketable securities that can easily be converted into cash. Wasting assets. These are fixed assets that depreciate through wear and tear, as for example plants and machinery, those whose value expire with lapses of time, such as patents and leases. Also those that become exhausted or consumed through being worked, such as mines, quarries. Components of balance sheet. Under liabilities, we have current liabilities, non-current liabilities, and capital. Under current liabilities, examples of current liabilities, we have bill payable, sundry creditors, dividend payable, outstanding expenses, accrued expenses. Under non-current liabilities, we have long-term debit, debentures, long-term loan from bank. Under capital, we have net profit, interest on capital. Specimen form of balance sheet. Company Act 1956 has prescribed a particular form for showing assets and liabilities in the balance sheet for companies registered under this act. There is no prescribed form of balance sheet for a sole trader and a partnership firm. However, the assets and liability can be arranged in the balance sheet into 1. In the order of liquidity, 2. In the order of performance. In the order of liquidity, when assets and liabilities are arranged according to their order of liquidity, an ability to meet its short-term obligations, such an arrangement of order is called liquidity order. In the order of performance, this method is commonly used by the companies. This is a table showing specimen form of balance sheet arranged in order of liquidity. This is another table showing specimen form of balance sheet arranged in the order of performance. Thanks for listening.